Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Stellus Private Credit BDC, and let's just say things are getting interesting with a surprise capital injection. Alright, so what is the big news here? Stellus Private Credit BDC, a company that invests in other businesses, is bringing in fresh cash. They sent out a notice to their investors on the 15th of September, asking for money to buy more of the company S shares. Think of it like a business essentially selling more pieces of itself to raise funds. And this move is all about selling equity or ownership pieces. Specifically, they are selling 981,034 shares of beneficial interest to their investors. The total amount they are aiming to raise is a cool $15 million. This is something that underwriters are involved in, meaning there are no big fees being paid out to banks to sell these shares. Now, how does this happen? It is done through these things called subscription agreements. Basically, investors who are already part of Stellus Private Credit BDC have agreed to put in money when the company needs it. They have to give investors a heads up, at least 10 business days before they need the cash, and investors then fund these requests up to the amount they committed to give. And why are they doing this without a big public fanfare? Well, this sale is exempt from the usual strict registration rules that public companies have to follow when selling shares to the public. They are using a specific exemption from the Securities Act, which is designed for private offerings like this, where the investors are sophisticated enough to understand the risks without all the usual public disclosures. It's also worth noting that Stellus Private Credit BDC is classifying itself as an emerging growth company. This means they can take advantage of some relaxed reporting rules designed to help newer companies grow without being bogged down by extensive compliance. They have also chosen not to opt out of the extended transition period for new or updated accounting standards, meaning they will continue to follow the older rules longer than most companies. So, who is Stellus Private Credit BDC? They operate as a business development company, or BDC. BDCs are a bit like mutual funds for private companies, allowing everyday investors to gain exposure to businesses that are not publicly traded. These companies typically invest in smaller or mid-sized businesses, often providing debt and equity financing. They are known for their dividend payouts, as they are required to distribute at least 90% of their taxable income to shareholders annually. The report itself is dated the 19th of September 2025, while the earliest event reported is the 15th of September, which is when they issued the capital drawdown notice. The actual closing for this sale of shares is expected to happen around the 29th of September. Now, looking at this from a business perspective, this capital raise is a clear signal that Stellus Private Credit BDC sees opportunities to deploy more capital. They are bringing in $15 million, which they intend to use for their investments. This is a significant amount for a company of this nature, suggesting they either have specific investments lined up or are looking to expand their portfolio. From a Warren Buffett-style analysis, bringing in capital is generally good if it is deployed effectively. The key question is, what will they do with this $15 million? Are they investing in high-growth, promising private companies, or are they just looking to shore up their balance sheet? Without more financial details in this specific filing, it is hard to say for sure, but the act of raising capital itself usually means they believe they can generate returns from it. The fact that they are utilizing exemptions for private placement means they are likely targeting accredited investors who understand the risks associated with investing in privately held companies. This is standard practice for BDCs, as they often invest in less seasoned companies. My take on this filing is that it's a positive move for Stellus Private Credit BDC, demonstrating their ability to attract capital from their existing investor base. This strengthens their financial position and provides them with the resources to pursue new investment opportunities. A key risk to watch would be how efficiently they deploy this capital, and whether the investments generate adequate returns to cover their costs and provide profits. The company's direction seems to be one of growth and expansion, funded by strategic capital raises. The opportunity here is clear. They are expanding their investment war chest. Alright, that is our quick decode of the Stellus Private Credit BDC filing. What are your thoughts on this capital raise? Do you think this means exciting new investments are on the horizon? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more regular dives into the financial world. And don't forget to join our Discord server, linked in the description, where we discuss these filings and much more. Thanks for watching, and I'll see you in the next decode.